Good morning. The Indian market seems to have hit the consolidation path post the big pullback we have had recently. We're in a trading range for few days leading up to the budget. Decisive moves are expected next week due to F&O expiry and union budget. Also, the latest GDP figures will be out next week. We expect another soft start and perhaps another day of intraday churning within a tight trading band. Watch out for weekly inflation data around soon. Although we have recovered smartly after 3-week drubbing, doubts still persist about the continuation of the rally. The current consolidation may continue for a few days before the move towards 5,690, so be careful and trade cautiously even as bias remains positive for now. The PM's media interaction largely leaves a lot to be desired as far as tackling corruption is concerned, but he has promised action on his front and on reforms in the coming days. In this context, the budget seems to be an important event. We have to see what steps the government take to bolster the public confidence and revive its surging fortunes. Whether the centre obliges the opposition and sets up a JPC also remains to be seen, as the daily dose of news on CBI into 2G scam is not doing any good to the market sentiment. Meanwhile, the FY11 disinvestment target may not be met as the centre has deferred sale FPO after postponing the FPOs of IOC and Hindustan Copper. All eyes are on ONGC FPO. On the other hand, we have seen a steady improvement in global economic landscape. In fact, the US Fed has just upped their GDP forecast for 2011. We are seeing some shift in global liquidity from emerging markets to matured markets. QE2 has of course placed a crucial role in lifting the global liquidities in commodities. One has to see when a central bank in the developed world, especially in the US, starts jacking up the rates. FAG Bearings and Thomas Cook India will declare the results today. FIIs were net sellers of Rs 2.3 billion in the cash segment on Wednesday according to the provisional NSE data. FIIs were net buyers of Rs 8.16 billion in the F&O segment. The domestic institutional investors were net sellers at Rs 684.9 million. Moving on to recommendations, the technical calls for the day are: we recommend traders to sell IDBI February futures below Rs 136 with a target price of Rs 130 and stop loss placed at Rs 139. We advise buying Shriram Transport Finance in the range of Rs 703 to Rs 708 with a stop loss placed at Rs 690 and for the target price of Rs 734. Our derivative strategy for the day are: short Renuka Sugars February futures in the range of Rs 81 to 82 for the target price of Rs 75 and a stop loss placed at Rs 83.5. Long Union Bank of India February futures in the range of Rs 343 to Rs 345 for the target price of Rs 355 and a stop loss placed at Rs 339. Thank you. Wish you have a great day ahead.